Hi, today I wanted to talk about VA funding fee. What is it? Why is it on there? How does it work, etc. Let's start with what is the VA funding fee. The VA funding fee is a one-time charge by VA that gets collected and then gets put into this pool of money so that in the event there's a future default, whether it be on your loan or someone else's loan, the VA has that money set aside to make the lender whole. So, for example, let's say a veteran owes $400,000 on their home. Unfortunately, they fall behind. It goes into foreclosure. The lender can only sell the home for $350,000. That $50,000 shortfall gets paid out of that pool of funds that's been collected from all of the VA funding fees that have been collected over the years. And this way, VA doesn't have to charge any kind of a monthly mortgage insurance similar to FHA and conventional. They just have this one-time fee that gets collected and put into that pool of money. So how much are you going to pay for your funding fee? That's going to largely depend on your situation. Let's say you're a first-time use of your VA. In other words, you've never used it before and you want to do a zero down payment. That funding fee is going to be 2.15% in that situation. However, if you want to do zero down and you've used your VA before, in fact, this is your third or fourth or fifth time using it, that funding fee is 3.3%. Now, if you're able to do, say, a 5% or greater down payment, it's going to be a funding fee of 1.50%. And then there's even another break at 10% or greater down. If you do 10% or more down, it's 1.25%. Now, let's say you own the home and you're wanting to do a cash out refinance, and this is your first time utilizing your VA to do such a cash out, if you will. It's a 2.15% funding fee. And then if you've used it before, in that situation is 3.3%. And then finally, if you want to do what's referred to as kind of a streamlined refinance for VA, which is also referred to as IRRL, IRRRL, that's a 0.5% funding fee. Now, how does this funding fee get collected? Well, again, it gets collected at closing. And so it can either be paid in cash or as part of your closing costs, or it can get financed into the loan. Most veterans choose to just finance it into the loan. It only adds a little bit to their monthly payment and obviously reduces how much cash they have to bring in terms of closing cost. So listen, a VA loan is a great way to go. I hope this information is helpful as far as explaining the funding fee and why it's on there and how much it is, etc. But I'm sure you might have some additional questions. And if you do, please reach out, give me a call, text me anytime. Happy to answer any questions you have regarding VA loans or any type of loan for that matter. All right, well, listen, again, I hope you found this helpful. Give us a call if you need anything. We'll talk to you later. You have a great day. Bye-bye.